They're gonna catch me checklist. That's a bad bet.
Welcome back to Never Fade, the NFT podcast. I'm your host, FaXx. Thanks for joining us. Thanks for all the support. Don't forget to subscribe to the podcast. Go ahead and click that subscribe link right now. Show us some support. Helps grow our reach. Absolutely appreciate all the takes and feedback we're getting both on the YouTube and on Twitter. Follow us at Never Fade NFT. As always, I'm with my co-host, the one and only Goodmonth. Eth, what's good, Goody?
What's Gucci, bro? How you doing? It's been a while. Last week,
Yeah, it's been a minute, man.
you've been traveling.
Yeah, I'm on the road right now, in this quaint office at the moment. No Kobe jerseys on the walls, but yo, I gotta tell you, I don't know if you were just like on vacation mode last week. You were in a good headspace, but you were dropping some fire takes. Wait, nobody's dropping takes like this out here. Guys, I want to just start with one that I think really resonated with me the more I thought about it, and that was that L1 money is the new old money. And I think sometimes we get caught up into the minutia of the day to day, and people kind of like forget the big picture here, which is that, we have a potentially generational opportunity here to accumulate Ethereum. We think this is going to be a very distinct cryptocurrency in the future. And I at times have called this kind of bear market period we're in like the great accumulation. I feel super underexposed. I don't know what to do about it. But, there's this kind of like idea that while Ethereum is at these levels, it kind of presents an opportunity, right? Because if this thing takes off, it's going to be harder and harder to catch up with it. So, I mean, in general, are you feeling like comfy and cozy with your spot? Are you feeling underexposed? Where are you at?
Yeah, I think I always feel a little twinge of underexposure. I think that's pretty natural when you're bullish on a space. You always want more. And I don't really want more for the sake of just sitting on more assets. Like I want more for the sake of diversity, Like if I was really just letting the cannon go burr, I'd be grabbing every single floor off of the Art Blocks collection, knowing that a lot of those floors won't move, but some will, So I think if the bear market's a very fascinating time, and, hardly anybody listening to this podcast has ever really been through one. You have to be kind of in your 40s or near your 40s to understand what it was like to be in the real world during a recession back in '08. And this is a bear market that's confusing, and it's doing exactly what markets do. I mean, I've talked to a lot of people who have always been bullish, and they're starting to have that disillusionment sink into them right now. I might kind of be looking at one right now. I'm not sure.
Yeah, I am one of those people. I am feeling disillusioned right now, Good. I'm feeling lost with what is the point of some of these NFTs, most of these NFTs, and I think like at the very bare kind of essentials, like for me, it was like the point was for it to be a store of value, something that is going to at least track ETH and hopefully outperform ETH. The whole point is like, if you pick your spots well with the supply and demand situation, potentially you're going to be outperforming Ethereum. And that's what we saw between 2021 and 2022. Late 22 into 23, there's been some opportunities, some ups and downs. But like right now, I just feel like the NFT kind of capitulation is now into like a slow bleed out phase. I mean, this is what happens in hype cycles, right? You have a blow off top. Maybe you have a couple of like dead cat bounces. You have some rebounds. But then at some point you go into this like long-term slow bleed, and that's really like the painful doldrums up there.
Yeah, I think that is the general consensus. But when you zoom out of the NFT space, you zoom out of the Web3 vertical, you zoom out of the tech sector, you realize there just are no big winners right now. And because of that, you have to kind of shift your lens on what winning is in this space. And now I have never been through a bear like this before. I was coming out of college when the recession was happening, and the recession was so brief with the bank bailout in '08 anyway. So it didn't really have that huge kind of pullback and that kind of stagnation that we're seeing now, because now we're seeing interest rates fight with debt and all these different deals that is causing a lot of stagnation within markets. But when I talk about looking at winners on a different lens, it's almost like kind of grading on a curve for the environment. So winning here is different than winning in a bull, and it's not all about gains. It's really about preservation and placing your bets on the right people during the bear. And when you're building during a bear, it all comes down to saying no. It all comes down to reducing burn and staying lean. No one is getting rich during a bear. No one is having a good time during the bear. They're surviving, regardless of how much their capital allows them to extend. Everyone's cutting back, whether you're one of the FaNG companies or you're a lean startup. Like, you really need to be as small and lean as possible. So when you zoom back down into NFTs, it all comes down to betting on the founding team and the organizational structure. So who has the organizational structure that can breathe life back into this in a bear? There's one answer, and there's a half answer. That's it. I don't know what to tell you.
Yeah, I hear that, right? And like for a good portion of the bear, I took refuge in Yuga assets, and then pivoted to like some D gods, and then of course like Jack Butcher art and some of this stuff, squiggle in the bag, just things that I think are going to make it, that are going to hold value. But one particular area that I'm especially disillusioned with, that I want to ask you about, good, was the metaverse a mistake?
Yeah, the metaverse was hot air with the terminology and the hope of it. But I think at the end of the day, the metaverse just was the jackhammer that cracked ground for new content opportunity and new content experiences. So the metaverse, no one could actually explain what the metaverse was when everyone was talking about the metaverse. It came into this like digital community hangout, a place where people gather, a third place, but on the internet. And I think all those things are true, and the formations will come, but they're just going to look vastly different than what we all thought. Apple VVR was announced during a bear market during the summer. They took a big bet on that. And Apple, when it comes to hardware and operating systems, like, they're not going to announce something that doesn't hit well. Google Glasses was experiential and it was a FAFO. Snapchat lenses, it was experiential, it was a FAFO. Apple VVR is going to hit. Like, if those actually do make it to the production line, which I believe they will, because I don't think Apple's ever announced something and then, cut it at the production line. Maybe some listeners have some information on that I don't know about. So I do think Apple VVR will hit, and I do think people will buy it, and I do think people will need it, and I do think people will want to explore it. And I think that's going to be a part where at least the first world countries will dabble and adopt it, and there will be new application layer demands to give people what they want to tune into.
Does that have anything to do necessarily with non-fungible tokens or blockchain?
So we live in a world right now where people operate with digital assets on top of digital assets in the application layer without having any concept of non-fungible tokens or blockchain. So is blockchain a necessity for a metaverse-esque experience? Not at all. Like, that's where AR, VR comes in. And there's going to be a lot of people that opt into AR and VR and don't ever care about the blockchain or don't see any value in it. But there's going to be a lot of people that understand that putting something on a ledger matters. I mean, I'm in my almost mid-30s and I care about memories. I care about putting things in a historical fashion. I take photos of my family, and when Apple stitches it together, I watch the memories back. Like, photo imagery, memories, revisiting, it's an important thing to me at this point. When I was in my 20s, it wasn't. I was like, screw the past. Screw it all. I don't want to look back on it. Move forward, move fast, break things. But, I think building, as you spend time in digital worlds, uploading that to a ledger and using the blockchain as a way of storing assets, whether those assets have a dollar value to it or whether those assets have a sentimental value to it, I think that storage matters. And so I do think it has a place. And even in this bear market where everything's a falling knife, you have people that love their squiggles, that love their punks, that love their apes. They don't want to let them go. And as we get into a, VR world with blockchain tied to it, which, can be the metaverse, if that word still is going to be what the word is, people are going to engage with it and they're going to care about it. And there will be sub-communities possibly that come in and find things valuable and trade them. And I think that's the biggest miss within this space that no one talks about. And I always led with it that, the trader world fuels the economic side of what we knew as NFTs, but traders were never the persona to collect. And it's two different people. Like, the collectors that were in on these novel technical advancements are still holding and are still collectors. And that's what happens when you go through the collector cycle is, things have no value, things have a ton of value, things have lower value, and time then does its thing. So, might I answer your question?
Well, it seems like, let me be more specific. Let's talk about two specific examples of what people in this space would have considered the metaverse and kind of what we thought potentially was going to happen and kind of where we actually are. So one of those examples is Sandbox. Right? Sandbox was one of the early movers in the space in terms of, digital land. They had all kinds of collaborations. They took a more centralized approach in that they had a team that was doing collaborations with celebrities, musicians, companies. They were everybody, including Bored Ape Yacht Club, Artifact. They got these big plots of land. I was accumulating Sandbox land, and I'm pretty much down to just one little piece of land next to Zen Run, which was supposed to be this prolific horse racing game, and those assets are all down. This land I have adjacent to Zen Run. I still have a bid on it, right? For more than I actually got it for because I sniped it on the drop. So it's kind of interesting. But I think the idea was people were going to develop out these spaces within Sandbox and it would be this game. And I'm getting these messages, beta experience invitation. Evidently there's people playing this, but I feel that it really didn't go the way that I had envisioned. And let me tell you what it is that I had envisioned. I had envisioned that a space like Sandbox would aggregate a lot of traffic. So a lot of users would want to play this game and it would become essentially a very popular video game with very unique different spaces that people are standing up and all walks of life and all kinds of different games and interactions and all of this. And because of all of the traffic, essentially it would operate to some degree like anything else online that has a lot of traffic. Let's use the example of Instagram. The Instagram feed that Facebook, now Meta, bought for $1 billion, that's now worth, gosh, I don't even know, 100 billion or something like that. Like that's prime advertising real estate, right? So that's prime real advertising real estate. So imagine that you owned a slice of the Instagram feed. So in my mind, I thought, hey, like if there's a bunch of traffic, if this is a game that a bunch of people are playing in and you own the real estate in it, that gives you an opportunity to provide attractions, potentially monetize in terms of advertising, like all of these ideas that if the traffic isn't there and it's not that sticky experience that people thought, kind of goes out the window. I mean, was I way off base with this idea?
No, it's a good line of thought, and it is an okay bet. But I didn't buy any Sandbox or crypto voxels or Decentraland because the graphics and the experience weren't there. And the real problem with that is that in order to provide scale and the computational power that's required, you need to like downgrade the graphics to be voxel. And that's why you can have an expansive world like Minecraft, allow people to build whatever, whenever, because it's on these building blocks and it's voxel. But voxel's going backwards. It's nostalgia. It's not moving forward. That's why what the other side is building on the M2 engine with better graphics and an expansive world is a little bit more approachable, though there is a lot of blowback from the gaming community that's saying, like, with all that money dumped into this, I would have expected better on the graphics side. So even then, other side's not hitting that experiential graphic level that people expected. I think it's a lot better than, voxels, and I think it's worlds better, and I think it's actually capable of having people spend their time in it. But Sandbox, crypto voxels, Decentraland, Gala games, it wasn't a adult forward, 4K movie experience. So that was the biggest downfall. You're not wrong in everything else. Like, Sandbox is highly functional, highly operational. They have great founders underneath, behind that team. They have a good go-to-market team. I just don't think the experience is what people crave if they're going to be in that world. So I think that was just the misstep there. I actually did the same line of logic. I made the bet on Zedrun specifically as the gaming platform because the graphics were futuristic, the graphics were there, people had a really good time with it. And I made a bet that was going to be the gaming platform, that it was going to expand beyond horse racing. I was like, horse racing is crazy stupid. You load the horses in, see if you win. And I just thought that was a V1, and V2 is going to be all these other type of Web3 games. And if Zedrun operationally had the team that Sandbox had, Zedrun would have been amazing. But they had a terrible team that was completely lost on their roadmap and couldn't figure out how to be innovative on the traction they built. So, you're looking at, frankly, two bad bets. I have a bunch of horses, like over 60 horses, a lot of Z1s. Like, I mean, there's a lot of sunk capital into that was going to be a big bet. And I could still extract liquidity out of that in a bear market, which is impressive. Same with you with the bids that you can get on that Sandbox land. That's the benefit of getting in early. But at the same sense, it is, there's execution risk there. And Sandbox, I think, didn't go big enough on graphics, but Animoca is behind Sandbox and Animoca is behind other side. So I think Animoca's, bet on the other side is a calculated bet on what the Sandbox fell short on.
Yeah, but I think execution risk is a common theme across this entire space. Like, to be honest with you, like, I feel like in retrospect, this idea that, like, these assets paying that much money that far in advance of the development and actual like gameplay, it doesn't make sense. And like for, taking this conversation to other side, right? So when the other side minted major event, basically the first time I've ever seen the Ethereum chain really, really get clogged up and almost become non-functional because of the amount of traffic trying to execute that ridiculous mint. Obviously, some mistakes were made. But besides that, right, like when you think about it, like the amount of money that was raised, the amount of money that people paid in order to, secure in these like parcels of other side land, that far in advance of this actually like being an experience that is playable. To me, it doesn't make sense. And now here we are down the line. There's been some gaming experiences. There's been some previews of some pretty cool looking graphics and some ideas of, okay, we can see where this is going. But like, I'm not sure, man, if this even makes sense anymore. Like to me, I'm disillusioned, right? So like, I still hold like a other deed inside of the middle circle, right? That I paid a lot for. I'm not going to see.
I mean, dude, in a year and a half's time from when they sold that other side mint, they have a platform with a community that is planning to launch a game on that platform with their community. That's impressive.
I think the actual speed by which that they are developing a game in the big picture of how long it takes to develop games and the fact that they have a community and all of this stuff, it is impressive. But there's these certain like economic dynamics.
But you get high off the gains. You get high off those gains, right? Like you are seeing that dopamine hit you with the upside, with the gains. You're not feeling the action, kind of is what you're saying, right? You have to make these long-term bets. We've had these talks privately a lot where like you think my strategies sometimes are too long and too slow, and you've explicitly said like, yeah, that's a good strategy for you, but I'm not here for that. Like I'm going floors. Like you know, I'll buy something way undervalued, list it like 3x, it'll sit for 6 months and pop at like all-time highs of the collection. It's like, that's not your game.
I mean, look, clearly there was like this speculative bubble that happened. If you remember, dude, after Other Side minted, the codas were selling for any land that had a coda. It was like 25 ETH, 30 ETH. I remember watching these things and like to this day, here we are today, the coda has done zero. The coda has done zero. The only thing that's happened is these lands have kind of separated now, and we know Legends of the Mara is coming up and they're going to have like an important role in this game. And there's ApeCoin involved and, there's this massive treasury of ApeCoin and there's something there, but like, I just feel like the idea that paying this kind of money so far in advance, it was a really like misdirected concept. I think like when people were paying that much money, they're thinking that they're going to have something is going to happen within the next year with that asset. And I feel like now these are the pains of that not happening. Will Legends of the Mara be interesting? Maybe. Will Other Side end up to be like a fun and exciting game? Maybe. But I think like my point is, I don't think that anybody that bought any other deeds anywhere close to mint price is going to see return on their investment. I think from these levels, maybe. But I could also make a case that the Other Side's not going to make it. and that the metaverse was a mistake.
The other side is 100% going to make it. Without a doubt. There's zero doubt that the other side won't make it. And the reason is because they've already delivered. They have a community that plugs in. Yes, the supply of the other side deeds was not only opaque and ambiguous, but it was also extremely large. And you had people buying with Bored Ape Yacht Club coat. You had people who didn't give a shit about the space feel FOMO for not listening to their friend or their friends of friends and getting in when they could have. So that they set up a wallet and they came in. Like, the other side was peak adoption into Web3 for people who would never adopt it. Lawyers that deal with papers and not on their digital desk set up a wallet to get in on the action. It was the uncle, grandpa, aunt, cousin effect where everybody was going to get in on this action, and that's what caused the demand. And yeah, you know, it took a big hit, but dude, if you are not sitting on art blocks or Yuga assets, like, sell what the fuck you have and get in on the other side, and you will experience better action and better opportunity than anywhere else, aside from emerging NFTs that are popping off, like generative art that artists are running their own mechanisms for, such as Jack Butcher.
I think my concern right now is, even if the other side ends up to be a popular game and a functional game that people enjoy playing, I don't see a clear link between that and actually the assets needing to cost.
Dude, I mean, your kids are, 4 years away, probably your oldest, like 4 years away from just asking for Roblox dollars for Christmas. Like, how's that going to hit when your kids just want Roblox dollars that just go like right into the Web 2 servers and means nothing, gets them nothing?
Yeah, but here's the thing, like, Roblox is a game for kids. Is other side?
Everything we do in the tech space is for the younger generation. Like, they're the ones who grow into it. It's like, tech for older people go away. We have responsibilities. We fucking link things to our bank accounts using the Swift protocol and automate things that way. And we go to Catalina wine mixers and boring stuff like that. Like, these kids are, I mean, admit it. The freaking wine clubs are boring. Admit it. Your suburban friends are boring. They're listening into the pod. They're so boring. And you know it.
I mean, I have like, the dopamine hits from NFT trading. Like, look, I come from a background of, for fun, playing poker, playing daily fantasy sports, betting on sports, I love the action. I especially always loved betting on golf. Why? Because golf was like 4 days of action. You place a bet, and then it's like 4 days of experience and enjoyment. So with NFTs, it was like, oh yeah, this is like a year of enjoyment. This is like 2 years of enjoyment. And absolutely, like, it's hard to get as excited about stuff outside of this space, which is kind of sad to say, to be frank. Like, don't get me wrong, I have a wonderful family life. I have friends. We do normal stuff, with my wife. We go out, this kind of thing. But like, the hobby of sports betting, that stuff, like, it doesn't feel entertaining to me anymore compared to the action here. So maybe that's what it is in this market as it stands. Like, there's just, the action's not there. And
Yeah,
maybe
the craps
that's
tables
the reality.
are dead right now, man. Like, you go into a casino, there's 4 people throwing dice on, a floor with 10 tables. That's what you're feeling. And that's what everyone's feeling. And the problem is, honestly, the big problem is people like see an empty table and they're like, oh, I'm going to go take the dice and just like carry this thing on my back. And it just doesn't work, I'm gonna go sweep this floor and make it pop, but you can't change people not coming into the casino. NFTs is not gambling. Like, NFTs is buying something that is a crypto token that has some type of community connection to it. And if the community isn't there, an opportunity doesn't come up as a holder, then you're just buying art. So you better make sure the art is good. So that's what it comes down to. You're buying art and you're having an opportunity to be a new wave collector in something where provenance can time warp, or you're buying into a community that has opportunity that comes up, whether that's job opportunity, whether that's creative opportunity, whether that's entertainment opportunity. And if you can't distill those things, then you shouldn't have it. People who own DeGods, they love Frank. They love to watch Frank Faffo. And Frank has Faffoed his whole life outside of UCLA, trying to figure it out, trying to figure out the next hit, thinking of the future, thinking of these things. And, Frank is going to miss more than he hits until he hits big. And is DeGods his big hit? I don't think so. I think eventually Frank leaves DeGod in the dust and hits big elsewhere, and DeGods follow. Because why? Because they love Frank. It's entertainment. That's it. So people who own apes are like, what is it with DeGods? I don't get it. I don't understand. They just love this Frank guy. I'm like, yes, that's it. They just love this Frank guy. Get it through your skulls. People own assets to be a part of something, to feel something, and they feel good when they follow Frank. That makes sense. Do you get it? And for people who shake their heads like, oh, I don't get it, then go back to your Netflix show and stream 7 episodes of Succession and pay $15.99 for it, because it's on HBO Max. But, you know what I mean? Understand what your entertainment is. And people have never understood this. This is my same approach to gambling. And I used to play craps a lot. I don't play it anymore. But, I walk up with money in my pocket and it's entertainment dollars. I never played to get money back. I put entertainment money down, and my goal was, can I entertain myself an entire weekend? That was it. That was the goal. If I came back with money in my pocket, I kind of played it wrong.
Yeah, and that's kind of where I'm at with the visualized value NFTs, like the checks and OPEP. I just enjoy it. I think it's entertaining. I love watching Jack cook. I like the art. I feel something when I see kind of this, and also you pair that with the philosophical kind of ideas that are coming out from this. I don't care if I get my money back. I already turned down 17 and a half ETH off of my Series 1. That's not the point, I do feel like it's a fresh experience. I'm here for it. And maybe I'm a little bit disillusioned about the 2021, 22 hangover with some of the Yuga stuff. That being said, we're still seeing crazy action in terms of the volumes on trades of these NFTs. We saw Trippy 8 sell for 275 Ethereum. You're still bagging a Trippy Ape, the best one in the collection, by a lot of accounts. When you see a sale like that, 275 Ethereum sale on a Trippy Ape in this kind of bear market, what's your thought process? Good?
Duh. Someone got shaken out of a lifelong heirloom leakage. Someone picked up a lifelong heirloom. Market met.
You just can't shake this guy, dude. Like lifelong heirloom, dude. Heirloom leakage. Man, this is conviction, dude. This is diamond hands, dude. I don't know. If I didn't have this kind of mentality sitting across from me right now, I don't even know where I'm at. I think you're doing a service for people in the NFT space who, do see the big picture and who do want to hold long-term assets like this that have that collectible, provenance. And so
Somebody pops off a clean 4T trippy for $500,000 in a bear market, and you get to go on Twitter and you get to put your trippy up there, which arguably is the best ape in the collection. I don't make the rules, and it gets over 10,000 views with people saying, "Oh my God, what the fuck? This is great. I love it. Yes, yes, yes. Grail, grail, grail."
What?
Where else in life do you get that action?
Nowhere else, dude. It's unique. It's unique. We're down, but we're not out. Good. I think we're going to keep it tight today. Definitely appreciate your thoughts. Before we sign off, any kind of departing words for our listeners?
Yo, like, subscribe, download, screenshot, send it to me in the DM because you like FaXx's pretty boy face. Really, we're trying to get our word out there and just broaden the scope of Web3 and help partners, protocols, anybody that we really like. So if you have anybody who you think we should promote on the show, you let us know. We'll look into them, try to get a dope anecdote on them. Otherwise, keep your head up. The market is tough. Don't try to feel things. Just try to get focused for the next run.
Let's fucking go. With that, this is another episode of Never Fade the NFT podcast. Thanks for tuning in. Follow us at Never Fade NFT. Follow me at FaXx_ETH. Follow our guy at Goodmonth ETH and our producer at Hazel B. Jordan on Twitter. That wraps it up. See you next week.
That's a bad bet if the bags check less. About to burn back to back, flipping not cheap when that Jenny duh hits. That's the race to 250 in the world and you chose to sleep. That's a bad bet if you wake up checkless. No more people without bags yet they need status. Running head first with the VV check thirst. Never heard of a hearse, but they connecting the dots.